Be Wealthy and Smart, episode 1607.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about a real estate update, because at the end of the year, a lot of people were taking their homes off of the market. But right now we see mortgage rates are lower and home prices are easing, and there's actually more supply on the market for sale. All of that adds up to improved affordability for today's home buyer. Nationally, prices are about where they were a year ago, according to Parcel Labs, which runs daily studies of U.S. home prices. Prices on homes are 0.3% higher than they were a year ago. The latest S&P Quotality Case-Shiller Home Price Index, which reflects pricing from October, showed large disparities among metropolitan markets. In the top 20 markets, Chicago, New York, and Cleveland had the biggest gains, while 8 cities showed prices in negative territory, with Tampa, Phoenix, and Dallas seeing the biggest losses. Nicholas Godek, head of fixed income tradables and commodities at S&P Dow Jones Indices, said national home prices also continue to lag consumer inflation, as October's CPI is estimated around 3.1%, based on a provisional index the U.S. Treasury announced due to the federal data shutdown, roughly 1.8 percentage points higher than the latest housing appreciation. In real terms, that gap implies a slight decline in inflation-adjusted home values over the past year. So he's saying inflation is running hotter than real estate prices have increased. But we're seeing mortgage rates coming down. The average 30-year fixed mortgage is currently 6.19%, and it started 2025 well over 7%. So that 0.81% decline means significant savings for home buyers. For example, if a buyer put down 20% on a $410,000 home, which is the national median price, the monthly payment would be $200 less on average than it would have been a year ago. Weaker prices and lower rates are changing the math on what first-time buyers can afford. But we're seeing the biggest hurdle for first-time buyers be saving for a down payment. The typical home buyer now needs 7 years to save for a down payment, according to Realtor.com. That's down from the recent peak of 12 years in 2022, but still roughly double pre-pandemic levels, partly because the personal savings rate is so much lower than it was in 2020. Down payments continue to be the biggest hurdle to home ownership, in which the second half of this year fell to 65%, according to the U.S. Census, the lowest level since 2019. But an improved supply of homes for sale is adding momentum to the market. Active listings are now about 12% higher than they were a year ago, according to Realtor.com, but still 6% lower than they were just pre-pandemic. Pending home sales, which count signed contracts on existing homes, rose more than expected in November. They were 3.3% higher than October and 2.6% higher than November in 2024, and hit the highest level in nearly 3 years, according to the National Association of Realtors. Lawrence Yun, chief economist for the Realtors, said improving housing affordability driven by lower mortgage rates and wage growth rising faster than home prices is helping buyers test the market. More inventory choices compared to last year are also attracting more buyers to the market. And according to the National Association of Realtors, one of the trends we're keeping a close eye on for 2026 is geography. They say, we've seen new home markets slow down in previously hot markets like Texas and Florida, in part because of some limited cyclical overbuilding and the fact that mortgage rates remained above 6% in 2025. But there are also pockets of strength emerging, particularly in the Midwest. Markets like Columbus, Ohio, Indianapolis, and Kansas City, areas that have long been more affordable and are close to major universities, are showing outsized growth. And Danielle Hale, chief economist from Realtor.com, said, the biggest trend that we're most excited to see is an improvement in affordability. That's going to be good news for buyers, and it contributed to the fact that home sales will finally start to go up and get away from this 4 million home sales floor that we've been very stuck on over the last couple years. Improving affordability is really an important component of that increase in home sales for 2026. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.